Hello everyone, this is Prelims 2023 series lecture. So I begin. This one is the questions that I have asked in the last lecture. So what is the correct options? Medicines with emergency use authorizations indicates restricted use of medicines. The outcome of the medicine is not yet proved. Medicines got approval under Drugs and Cosmetics Act 1940. Actually, if you will see the Drugs and Cosmetics Act, so there is no provision for EUA, emergency use authorizations. There is no provision for EUA, okay, under Drugs and Cosmetic Act 1940. So this options is not correct. Now emergency use authorizations indicates there should be restricted use of medicine, and while the outcome of the medicine is not yet proved. Okay, so these two options are correct. These two are correct. So only one pair is correct. A is the correct option. A is the correct option. Okay. Now coming to it, emergency use authorizations. What does it indicate? What does it say? It says that the emergency use authorized medicine should be used in a restricted manner, okay, because its outcome has not yet proved, and medicines are used only in an unavoidable situation, okay, like pandemic recently, COVID-19. So medicines can be used only in unavoidable situation, okay, while all the medicines get approval under Drugs and Cosmetics Act, okay. Medicines are got approved under this act because medicines need to provide the data of efficacy, okay, and after that it got approval under this act, complete approval. Now India's drug regulation do not have this provision for an EUA, and the process for receiving one is not clearly defined in our act nor by CDSCO. So our Union Regulating Authority, Drug Regulating Authority, they are following the United States FDA, Federal Drug Agency definitions, okay. So CDSCO granting emergency or restricted emergency approvals to COVID-19 drugs during pandemic for the drugs like remdesivir and the favipiravir and itolizumab. So under the EUA, the manufacturer had to submit the safety data of the vaccine once in 15 days. Once in 15 days. While if the medicine gets conditional market approval, they need to submit the data once in every 6 months. So this one is larger category, lesser restrictions. It has much higher restriction. Okay. Now what is conditional market approval? So in India, conditional market approval was granted under this new drugs and clinical trial rules, okay, this one. So they need to submit continuous submission of the safety data on a 6 monthly basis, means half yearly. And conditional market authorization is a new category of market authorization. It was not earlier there, so it is a new category of market authorizations that has emerged during the current global pandemic of COVID-19, okay. So emergency use authorizations receives conditional market authorizations. So maybe the medicines are earlier get emergency use authorization, and after that it can get the conditional market authorization in India. And conditional market authorization in India is same as that of US FDA and EU, okay. So prior to this pandemic, the fastest approval for any vaccine till now came about 4.5 years after it was developed, okay. So it was the vaccine for mumps. Mumps is a viral infection. And you must have heard about this MMR vaccine. This one is measles, mumps, and rubella vaccine. Okay, these all three are viral infection. Viral infection. These all three are viral infection, and measles is covered under our national mission Indradhanush. Mission Indradhanush, or the universal immunization program of the country. Okay, measles is covered under it. The other two are not covered. Okay. So it took 4.5 years. It used to took once the medicines was developed for a vaccine for mumps granted in 1960s, and you have seen COVID has been granted in very short span of time. So what happened? These vaccines, medicines, and even diagnostic tests and medical devices require the approval of a regulatory authority. Okay. So before administration of these drugs or medical devices, it requires the approval of the regulatory authority. And drug administration, FDA, grants emergency use authorization only after it has been determined the and potential benefits. EUA is granted only to those drugs whose known and potential benefits outweigh, at that point of time, outweigh the known and potential risks of the vaccines. Okay. Coming to the one more thing that I want to say, that the Ministry of Chemicals and Fertilizers, Ministry of Chemicals and Fertilizers. Okay. It has three departments. Department of Chemicals and Petrochemicals. Another one is Department of Pharmaceuticals. Medicines fall in this category. Then Department of Fertilizer. These three departments is under Ministry of Chemicals and Fertilizer. You need to remember this one. It might be asked sometimes, match the following, like that. Okay. Now, this global hunger index, it has come up yesterday. So the global hunger index, India fares worse in South Asia, except Afghanistan. Afghanistan has fared much worse than India. So our country ranked 107th out of these 121 countries. And Sustainable Development Goal, goal number 2, also says that the end hunger by 2030. End hunger by 2030. Goal number 2, you need to remember that it needs to ensure that there should be access by all people to safe, nutritious and sufficient food all year round. Now, Global Hunger Index, its annual report. Okay. So it came first time in 2006. This one is the 17th edition of the report. And Welt Hunger Hilfe and Concern Worldwide, these two organizations are engaged in producing this report. So Global Hunger Index, it's based on 4 indicators. These 4 indicators are combined. So which are those 4 indicators? Undernourishment, child stunting, child wasting and child mortality. These 4, you need to remember it. Okay. Undernourishment, child stunting, child wasting and child mortality. Now the score is calculated on a 100 point scale, while 0 is the best score, no hunger, and 100 is the worst. So that means higher the score, worst is the scenario for the hunger. India scored this year 29.1. Okay. So India fall into the category of countries with serious hunger. Okay. So there are 44 countries in this category, and India fall into that category. So now among South Asian countries, there are 8 countries in South Asia. So Sri Lanka scores best, 64 ranks among all the South Asian countries. Okay. And in our neighborhood, you can see all those, this Nepal, Bangladesh, Pak and Afghanistan. These have scored like 81, 84, 99 and Afghanistan 109. So China, it has scored less than 5, and these countries, there are 17 countries which has ranked collectively. So those who have scored less than 5, they all have ranked collectively, and China is one of our neighborhood, in our neighborhood, and they have scored less than 5. So we will see all those 17 countries from different perspective. Okay. Like these are the 17 countries, just read once, and you can check the map also for these countries, and this will help you in your map exercise. So this Bosnia and Herzegovina, this one borders Adriatic Sea. Okay, you need to remember this. This one borders Adriatic Sea. Then this Montenegro, this one also borders Adriatic Sea. There is this Croatia, it borders Adriatic Sea. So these 3 countries borders Adriatic Sea here. Latvia, Lithuania and Estonia, these borders Baltic Sea. Latvia, Lithuania and Estonia. Okay. This one. Now China, for China, since it is in our neighborhood, we need to remember this important city also, location of the important city. However, Tropic of Cancer also passes through China. Okay. So you need to look into it. Chile is in the South America, and Tropic of Capricorn passes through it. It borders South Pacific. Okay. Now Kuwait borders the Gulf. North Macedonia, this one is landlocked. Serbia is also landlocked. While Romania, it becomes very important for us because it borders Ukraine as well as Black Sea. Okay. Hungary borders Ukraine as well as landlocked also, and Hungary has been declared not a complete democracy by the European Union Parliament. So you can remember this one also. Slovakia also it borders Ukraine. So and it's landlocked. So these 2 are important facts. Turkey borders Black Sea, and Uruguay is in borders South Atlantic. It's in South America. These 17 countries had scored less than 5 in Global Hunger Index. Now this Global Hunger Index, it is defined Now this Global Hunger Index, it is defined for the children under age 5. Okay. So what is child wasting? This is the first indicator. So wasting is defined as the having low weight for the height, for the respective height. Okay. And undernourishment is defined as the measure of the proportion of population facing chronic deficiency of dietary energy intake. That's it's measured in the calorific value. These 2, India has performed much worse. Okay. So the score is high. Score is high in these 2. Okay. Now what is child stunting? Stunting is the low height for their weight, for their age. So wasting, you need to remember, wasting is weight, low weight for the height, and stunting is height for their age, low height. Okay. Now child mortality, it is also defined as the children under the age of 5 who did not survive under the age of 5. So combining these 4, we get the Global Hunger Index for any country. So Global Hunger Index score for 2020 or for any year, they took the data of last 5 years and they calculated, like Hunger Index for 2022 is calculated for the data of 2017 to till 2021, and that's why Global Hunger Index for this year is not compared to the previous year. So Global Hunger score for 2022 can only be compared with the score of the 2000, 2007 or 2014. It's not that much necessary for the prelims, but you need to see at least once. Now Reserve Bank of India, this topic. So we will study RBI today, and then there will be in the subsequent lecture we will study the rates and other bank rates like monetary policy rate. So those things we will study in the subsequent lecture. So RBI, Reserve Bank of India, established on April 1st, 1935 under Reserve Bank of India Act 1934. Its headquarters in Mumbai. Earlier it was like when it was established it was in Kolkata, but in 1937 it shifted to Mumbai. So now Reserve Bank of India was established on the recommendations of the Royal Commission on Indian Currency and Finance. Royal Commission on Indian Currency and Finance, in 1926 it came. So it's also called the Hilton-Young Commission. It is also called the Hilton-Young Commission. So, and there is one important book that you need to remember, The Problem of the Rupee. Its origin of the rupee, its origin and solution. This book was written by Dr. B.R. Ambedkar in 1923. So on the basis of the suggestion of this book and the recommendation of this commission, Hilton-Young Commissions, RBI was formed. Okay. So in 1949, earlier it used to be the private bank. So in 1949, it was the nationalization of RBI took place, and then comes the Banking Regulation Act 1949. So first, so the RBI transfer of public ownership the RBI transfer of public ownership (1948). This act, under this act, nationalization of RBI took place. Okay. RBI Transfer of Public Ownership Act, and the banking regulations come under this act. Then comes the Banking Regulation Act. So all those banks, scheduled commercial banks and other banks, are regulated under this act. Okay. And RBI became member of the Asian Clearing Union. All the South Asian countries except Afghanistan, they are member of this Asian Clearing Union, and plus Myanmar. So there are 8 countries who are the members of this Asian Clearing Union. It used to, like, for the settlement of the payments, they use these institutions. It is headquartered in Tehran. And it came into existence in 1974. So it was the United Nations Economic and Social Commissions for Asia Pacific initiative. This one is Asian Clearing House, is the initiative of the United Nations Economic and Social Commission Asia Pacific initiative. Okay. Now the function of the RBI, it has mainly broadly two functions: banking and monetary regulations as a regulatory authority. So issuance of currency and to sustain monetary stability in the country, and to operate the currency and maintain credit system in the country. So it used to issue the currency. Okay, we will see later on. And it sustains monetary stability through exchange rate or through. As a regulatory body, we see that it regulates and guides the banks. It reviews and assesses their performance, and it provides license to the banks. It can inspect their activity, it enforce the laws and rules and regulations, and it can take the corrective actions also for those who are not following the rules. So this RBI Transfer of Public Ownership Act, through this act, bank is nationalized and Banking Regulation Act is used for regulation of the bank. You need to remember it. And this problem of the rupee, its origin and solutions was written by Dr. B.R. Ambedkar in 1923. So now coming to the section 7 of Reserve Bank of India, because of which if you remember in the like our earlier governor Urjit Patel, he has resigned. So under section 7 of the Reserve Bank of India 1934, the management, it talks about the management of the Reserve Bank of India. So there is one provisions in this section which says that the union government can issue direction to the Reserve Bank of India in the public interest. Okay. So union government can issue directions in the public interest. Otherwise, RBI functions on the basis of its central board, okay, on the basis of its central board. So section 8 discusses about the composition of the central board and the term of the office of the directors. It also talks about the appointment of the governor, deputy governors. So under section 8, central government appoint the governor of the Reserve Bank of India and as well as the deputy governor. Okay. So and union government has the authority to fix the tenure of the RBI. Although the section mentions that the governor cannot appoint for more than 5 years. But you can see that right now the governor is appointed for 3 years. So at the time of appointment, government can fix it. Okay. Again, this section also mentions that the directors cannot be appointed. Directors or governors can be reappointed, but the directors cannot be appointed for more than 8 years. For more than 8 years. Now, there has been the monetary policy committee, so which gives the what should be the repo rate of the bank. So monetary policy committee was suggested by this Urjit Patel. He proposed to make a monetary policy. And he proposed to make a monetary policy committee. In 2016, this came into existence. MPC came into existence in 2016. Okay. And earlier only governor used to decide this monetary policy rate. So after that, after coming into existence, this all the members used to decide using vote. Like through majority, it is decided. Through majority of the votes, policy rates are decided. Now there are 6 members in monetary policy, which includes 1 RBI governor, 1 RBI governor, this one, who is the chairman, ex officio chairman of this monetary policy committee. Then there is deputy governor, who is the in charge of the monetary policy in the RBI. and who is the member as well as who is the ex officio member of the Monetary Policy Committee. One officer of the bank to be nominated by the central board, okay, central board of the RBI. He is also the member, ex officio member of the Monetary Policy Committee, and 3 persons are appointed by the government. Now, in case of voting, first of all, there are at least 4 members needs to be present for quorum. Okay, so for any there is requirement of 4 members. Okay, and in case of absence of governor, he can appoint deputy governor as the chairman. Okay, he can appoint deputy governor as the chairman. Now in case of tie, while voting, in case of, since there are 6 members, so while voting in case of tie, the governor has the second casting vote. RBI governor has the second casting vote for the policy rate decision. Okay. Now, one more thing, every 5 years, Union government in consultation with the RBI decide inflation target. Okay. So, it's written in the RBI Act. Every 5 years, the government will decide the inflation target in terms of consumer price index, and they will notify in official gazette. So, the present target is 4% plus minus 2. So, that is maximum 6 and minimum 2, 2% to 6% inflation. Okay, and it should not fail, the inflation target should not fail in 2 consecutive quarters. Report that has come up recently in this year, I mean, so that report is RBI report on currency and finance. Okay, RBI published this report on currency and finance, and it has theme revive and reconstruct. So it came, it talks about the impact of COVID and how we need to like focus on the growth of the economy. Okay. Now, the policy formulations for monetary policy is looked by Monetary Policy Department of the RBI. Monetary Policy Department of the RBI. Okay. It looks into the policy formulation. While its operational department, Financial Market Operation Department. Okay. Slide I have discussed already that the RBI is the issuing agency of currency and coins. You can see that this here there is signature of this RBI governor. So RBI is the issuing agency of the currency and coins other than rupee 1. Rupee 1 notes is issued by this Ministry of Finance, signed by Finance Secretary. Okay. It is also the banker of the government. That means RBI can receive the receipts and payments of the union government or state government, and it can carry the exchange, remittance and other banking operations including management of public debt of union, and it has the principal account of union as well as the state government. It is called the bank of the last resort. That means all the banks, all the scheduled commercial bank or private banks, they can go to the RBI in case of emergency or in case of day-to-day, for day-to-day maintenance of their activity, for the balance, for their day-to-day maintenance of balance. They can take the money at the rate of repo rate. They can avail the credit, announce this credit and monetary policy. Okay. So we have already seen that this monetary policy, how RBI functions, and for credit like at repo rate or bank rate, they provide the loans and other things to the banks, real commercial banks. So that's why it is called the bankers of the bank or bank of the last resort. it stabilizes the exchange rate of rupee. Our rupee is not fully convertible. Okay, we will see it also, and since it is not fully convertible, like particularly this capital account convertibility is not there, and this stabilizing the exchange rate of rupee, how it has stabilized, like through purchasing dollars. Once the let us say rupee is appreciated, if rupee is getting appreciated, so that means it is less in supply. Okay, its demand has increased, so they can purchase dollar. RBI will purchase dollar. Okay, they will purchase dollar, so that its supply will decrease and rupee supply will increase, and that way this stability can be maintained. This one is demand curve and this one is supply curve. Okay. Now it's the agent of the Government of India in IMF. So all the central bank of the country are the members of the International Monetary Fund. It regulates the inflation target, as we have seen that is set up for every 5 years. 16 prelims 2021. So the question says the Governor of the Reserve Bank of India is appointed by the central government. So the Governor of the Reserve Bank of India is appointed by the central government. Yes, appointed by whom? Central government. Under which sections? Under section 8, okay, of the RBI Act 1934. Under section 8 RBI Act 1934, certain provisions in the Constitution of India give the central government the right to issue directions to the RBI in public interest. Is it correct? Certain provisions in the Constitution of India give the central government the right to issue directions to the RBI in public interest. What is written here? In the Constitution of India. Not in the Constitution of India. It's in the RBI Act 1934. Section 7. Section 7. Okay. So, under this section, central government can issue the directions to the RBI in public interest, not under constitutional provisions. Constitution did not talk about RBI. The Governor of RBI draws his power from the RBI Act. Yes, that's true. The Governor of the RBI draws his power from the RBI Act. Okay. So, which option is correct? Now, if second is wrong, so that means this one is wrong, this one is wrong, and this one is wrong. This one is only right. So, through elimination, if you knew only option 2 is wrong, that means through elimination you can tick the correct option. Non-banking financial company, this one is also important. So, these are the financial institutions which are engaged in receiving deposits and lending activities. Okay. So, these non-banking financial companies, they are registered, they need to be registered with, it's mandatory to get registered under, get registered with RBI. So, NBFC first gets registered through Companies Act 1956, and they should have at least minimum of net owned fund of rupees 2 crore. Earlier it used to be 25 lakh, and after 99 they increased the net owned fund to 2 crore. Okay. So, there are other conditions also for, like, the main activity of the NBFC should be principal business. Its principal business should be financial activity. Its principal business should be financial activity. Okay. And the principal business, it's not defined in the RBI Act, it's not defined. So, but Reserve Bank of India has defined it, because not any entity or any other entity can get registered as NBFC. So, as per RBI definitions, what Reserve Bank says, that the company's financial assets, its financial assets NBFC financial assets or its financial assets constitute more than percent of of the total asset. It constitutes more than 50% of the total assets, right? And the income from the financial assets should be more than 50% of total gross income. Should be more than 50% of the total gross income. This is also called 50-50 test. This is applied to NBFC in order to check whether its main activity, principal business is financial or not. Okay. This is applied by the RBI to check and grant its, like, give the license to function as NBFC. So there are two categories of NBFC. One is the deposit taking NBFC and another is the non-deposit taking NBFC. Okay. So NBFC cannot accept demand draft. NBFC is not the part of the, because NBFC is not the part of the payment and settlement system, and it cannot issue the check drawn on itself. And for the deposits that we put in NBFC, so it's not insured under Deposit Insurance and Credit Guarantee Scheme. Okay, Credit Guarantee Corporation. So it's like our deposits is not insured in NBFC under DICGC. Although the money under DICGC is very less, but still it's not, our deposit is not insured under DICGC. But in banks, our deposit is insured. Okay, so we need to remember this. So its other function is the acquisition of shares, stocks, bonds, debentures, securities issued by the government. So it can acquire those things like gilt-edge security that we call the best security, totally high, least risk security, gilt-edge security. This one, gilt-edge security. Risk-free security. Because these securities are issued by government. Issued by government. You can call it less risk or risk free. It might be engaged in leasing, hire purchase, insurance business or cheat business. But it cannot have principal business of agricultural activity. For that, like NABARD is engaged in those kind of activity. Okay. So NBFC cannot have principal business of agricultural activity. It is mentioned in the Act. It cannot be engaged in the industrial activity also. It cannot have principal business of industrial activity. It might be engaged in a small businesses activity, but not in bigger. For SME, it can use to create to lend SME to, but it cannot be involved in larger industrial activity. It does not have principal business of purchase or sale of any goods other than securities or providing any services and sale, purchase, construction of immovable property. Now those NBFC having principal business of receiving deposits, they are called residuary NBFC. Okay, and there are systemically important NBFC. So NBFC having assets more than 500 crore, they are called systemically important NBFC because financial stability of the overall economy depends on them. Okay.